There's a number that went almost unreported last week, and when I first saw it, I had to double check because it sounds like it belongs in a different story. 38% of all spot Bitcoin ETF assets in the US are now owned by hedge funds, pension funds, and registered investment advisors. That's more than $40 billion US dollars, not from individual retail investors, from the same institutions that manage retirement savings. I'm your crypto compass. Let's get your bearings. 5 years ago, most financial advisors in Canada would have told you Bitcoin was too speculative to touch. 2 years ago, it was cautiously on the radar. Today, Goldman Sachs has filed for a Bitcoin ETF. Morgan Stanley launched one 2 weeks ago, and the institutions that manage pension funds now own more than a third of all spot Bitcoin ETF shares. By the end of this video, you'll understand exactly what's driving that shift, what it actually means for Bitcoin's long-term stability, and, most importantly, what it means for you as a Canadian just starting out. I'll also get to the one number that changes how you should think about buying Bitcoin today. Stick around for it. To understand why institutions are buying Bitcoin now, you need to understand what changed in the last 18 months. For most of Bitcoin's life, institutional investors couldn't easily own it. Their compliance teams wouldn't approve it. Their risk frameworks had no category for it. And most importantly, there was no regulated product they could buy through the same channels they use for everything else. That changed in January 2024, when the SEC approved the first spot Bitcoin ETFs in the United States. For the first time, a pension fund manager could buy Bitcoin exposure through a standard brokerage account, the same way they'd buy a gold ETF or an S&P 500 index fund. No crypto wallets, no private keys, no unfamiliar custody arrangements. The floodgates opened slowly at first. Then came 2025. Then came 2026. And now we're at 38%. Let's break down who owns what. As of this week, hedge funds, pension funds, and registered investment advisors collectively hold more than $40 billion US in spot Bitcoin ETF shares. That's up from 24% just 1 year ago. A 14 percentage point jump in 12 months. Morgan Stanley launched its own Bitcoin ETF on April 8th, the MSBT, with one of the lowest fees in the market at 0.14%. Within 2 weeks, it had already attracted over $100 million. That triggered what analysts are calling a fee war. Goldman Sachs filed for its own Bitcoin ETF just days later, and BlackRock, which already runs the largest Bitcoin ETF by assets, is reportedly reviewing its fee structure in response. For context, 0.14% is cheaper than many actively managed bond funds. This is no longer speculative territory in Wall Street's eyes. It's a commodity to be competed over. In March 2026, the SEC also approved options trading on spot Bitcoin ETFs. That's significant because it means institutional risk managers can now use covered calls and protective puts, the standard tools they use to manage any other asset class. Without options, large institutional positions were harder to hedge. With options, the risk management calculus changes entirely. Now, I told you there was one number that changes how Canadian beginners should think about this. Here it is. $358 million flowed into US spot Bitcoin ETFs in a single day this month, while the retail fear and greed index was sitting at 15 out of 100, meaning individual investors were at extreme fear. Institutions were buying while retail was panicking. This divergence, institutional accumulation running opposite to retail sentiment, is historically significant. It doesn't mean Bitcoin will go up tomorrow, but it does mean that the investor base underneath Bitcoin is structurally different than it was in 2021. When retail investors panicked in previous cycles, there was no large institutional floor. Now there is. For a Canadian beginner, Here's what that actually means. You're no longer the only buyer in the room. The asset you're considering buying also sits in portfolios managed by professional risk teams at some of the world's largest financial firms. That doesn't eliminate volatility, but it changes the character of who you're investing alongside. Speaking of getting started, if you're a Canadian looking for a regulated OSC-registered platform to make your first purchase, I've left my Coinbase Canada link in the description. They're still running a sign-up bonus for new Canadian accounts, so it's worth checking out before you put $1 anywhere. Now, should Canadians be buying Bitcoin through an ETF or directly? This is a question I get a lot, so let me give you the honest comparison. Canadian Bitcoin ETFs have existed since 2010. Purpose Bitcoin ETF, CI Galaxy Bitcoin ETF, and others trade on the TSX. You can buy them through your TFSA or RRSP using any standard brokerage. No crypto wallet required, no custody concerns, and gains held inside a TFSA are tax sheltered. The trade-off is the fee. Canadian Bitcoin ETFs typically charge quite 0.65% to 1.0% annually. That sounds small, but on a $10,000 position held for 10 years, you're paying $650 to 1.6% to 1.0% annually. That sounds small, but on a $10,000 position held for 10 years, you're paying $650 to $1,000 in fees just to hold the asset. For a long-term holder, that compounds. Buying Bitcoin directly on a registered exchange like Coinbase Canada means you own the actual asset. No annual management fee eating into your returns. But you're responsible for your own security, keeping your account protected using two-factor authentication and understanding what you own. Neither option is wrong. For a beginner in Canada who wants to hold Bitcoin inside their TFSA without thinking about wallets, a Canadian ETF is a legitimate and regulated choice. For someone who wants direct exposure without a management fee drag, a registered exchange is the better route. The key word in both cases, registered. Whether it's a TSX-listed ETF or a direct purchase, make sure the platform is approved to operate in Canada. The OSC publishes a list. I'll put the link in the description. Here's what I want to leave you with. The shift to institutional Bitcoin ownership isn't slowing down, it's accelerating. Goldman Sachs' ETF filing, if approved, would be the fourth major US bank to offer a Bitcoin product in 2026. The SEC's approval of Bitcoin ETF options in March opened the doors to strategies that institutional investors use for every other major asset class. And Canada is not behind. Our regulators were actually early on Bitcoin ETFs. We had them in 2021 while the US was still debating. The infrastructure for Canadian investors to participate in the same institutional wave through regulated products already exists. The question isn't whether institutional money changes Bitcoin. It clearly does. The question is whether you want to understand what's happening well enough to make an informed decision about whether it belongs in your portfolio. That's what the Crypto Compass is here for. Let's recap what we covered. 38% of US spot Bitcoin ETF assets, more than $40 billion, are now owned by institutional investors. That's up from 24% a year ago. Morgan Stanley launched a Bitcoin ETF on April 8th. Goldman Sachs filed for 1 day later. And institutions bought $358 million in Bitcoin ETFs in a single day this month, while retail investors were at extreme fear. None of that means Bitcoin is risk-free. it's still volatile. The Strait of Hormuz situation this week showed exactly how quickly prices can swing on geopolitical news. But it does mean the investor base has fundamentally changed, and Canadian beginners in 2026 are buying into a very different market than the one that existed in 2021. If you found this helpful, subscribe. I publish Canadian crypto breakdowns every week. No hype, no price predictions. Just the context you need to make your own decisions. The Coinbase Canada link is in the description, and the OngSubi's registered platform list is there too. What surprised you most about institutional Bitcoin ownership? Let me know in the comments below. I read every one.